Something big is happening with Opendoor, and it's the kind of move that traders can't afford to ignore. The stock just had a massive green day, climbing over 10%, and the way the volume exploded has people asking one big question. Is this the start of something huge, or just a trap? In the next few minutes, I'm going to break down everything you need to know. We'll go over the trading action, the short interest, the hidden activity in the dark pools, and even the options market. By the end of this video, you'll have a clear picture of why Opendoor could be setting up for a major move. And trust me, you're going to want to stick around for this one. Before we go any further, let me just say this. This video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing here should be taken as financial advice. Always do your own research before making any investment decisions. Opendoor had a wild trading session. The stock moved between $7.87 on the low side and as high as $9.21 on the day, eventually closing up more than 10%. That kind of move alone grabs attention, but the real story is in the volume. Over 360 million shares traded today compared to an average of just over 400 million. A lot of that was algorithmic trading, heavier than what we've seen in the past few days. Here's what makes it interesting. Opendoor itself didn't release any big news today. The move was more about the broader market reacting to economic data. Durable goods came in at plus 2.9% when forecasts were actually negative. GDP came in at 3.8% versus the expected 3.3%. And jobless claims were just 218,000 when the forecast was 240,000. Strong data like this normally lowers the odds of a Fed rate cut, and we saw that probability drop to around 85%. At first, the market didn't like that, but then traders realized strong numbers are actually a positive, and stocks, including Opendoor, bounced back from the lows. Housing data also gave the stock a little support. Existing home sales landed right on target at 4 million units, with month-over-month results flat. Pair that with the most recent quarter-point rate cut, and housing-related names like Opendoor started looking a little more attractive. But the bigger driver today wasn't just macro news, it was short interest. Shorts returned nearly 500,000 shares, but 19.5% of the float is still being shorted. That's about 138 million shares. Official exchange data from mid-September showed 151 million shares shorted, which is about 23% of the float. That means between late August and mid-September, shorts quietly covered around 16 million shares, more than many people realized. A lot of that activity took place through dark pools, where large trades often stay hidden from public view. And speaking of dark pools, one after-hours trade really stood out. 1.5 million shares worth $14 million. Because dark pool trades are anonymous, it's hard to say whether that was a buy or a sell. But given the timing, while the stock was dipping, it looked bullish. Secondary market activity showed similar big blocks being traded. The options market tells an even bigger story. Today we saw $71 million in call premiums compared to just $18 million in puts. Nearly half of all options trades leaned bullish, and in the last 5 minutes of the trading day, more than $3 million in premiums went through. Moves like that rarely happen by accident. Wall Street often knows something before the public, and when you connect this with hints from Opendoor's CEO about an upcoming product launch, it looks like some traders are preparing for a major announcement. So where does the stock go from here? Bulls are targeting $10 by the end of the week, while bears expect to drop back to $7 or $7.50. Options open interest shows heavy bets at key strike prices. $36,000 at $8, $90,000 at $8.50, over $42,000 at $9, $31,000 at $9.50, and more than 100,000 contracts at the $10 strike. If Opendoor pushes through 10, we could see a gamma squeeze that takes the stock sharply higher, but that's also where shorts are most likely to push back hard to keep the stock under pressure. Another big factor is institutional buying. The most recent 13G filing revealed Jane Street purchased around 44 million shares. When institutions make moves like that, analysts usually pay attention. And let's be honest, many analysts just follow the big money. So don't be surprised if we start seeing new coverage or upgrades in the next few sessions, which could add even more momentum. Still, it's not going to be an easy ride. The stock barely held above its 10-day moving average, and there are plenty of sellers ahead. Tomorrow's PCE report will be an important test. If the data is strong, the market could rally, and Opendoor might benefit. And if Opendoor itself drops the product update that's been teased, the stock could finally push through those walls. So what does all this mean? For bulls, it looks like the setup is building. Shorts are easing off, dark pool trades are flashing signals, options flow is bullish, and institutions are stepping in. For bears, the argument is that Opendoor is still risky and could struggle to hold these levels. Both sides are locked in, and the next move could be huge. Now I want to hear from you. Do you think Opendoor is setting up for a breakout, or is this just another head fake before it drops again? Are you buying, holding, or waiting on the sidelines? Drop your thoughts in the comments. I read every single one. And if you found this breakdown helpful, hit that like button, subscribe to the channel, and turn on notifications so you don't miss the next update. I'll be covering any breaking news or major moves in real time. So stick around, because things with Opendoor are just heating up.